Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also hit that post notification bell so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers, so please be careful. Don't get yourself scammed. If you want to follow me on Instagram, go down to the description box of this video, click on that Instagram link, Richard Fain Millionaire Mentor, and give me a follow on Instagram, guys, if you are Instagram folks. If you own Instagram, give your boy a follow on Instagram. I'm trying to get the Instagram page built back up like we had the old Instagram page, which was under Richard Fain 28. That was the old Instagram page. And that was 90,000 followers on the old Instagram page. That was shut down in December of 23. Started the new Instagram page a couple months ago, maybe 3 months ago. And it's starting to grow, but we are nowhere near where we used to be. So if you guys want to follow me on Instagram and kind of keep up with me when I'm not on the YouTube channel, go down to the description box, click on that Instagram link, Richard Fain Millionaire Mentor, and give me a follow. And once you give me a follow, go ahead and send me a DM and let me know you're rocking with me and say hello. That would be great. We're going to be doing a lot of good stuff on the Instagram page. So if, like I said, if you want to keep up with me and kind of see what I'm doing when I'm not on YouTube, get down to the description box, click on the Instagram link and give me a follow. If you want 10 free fractional shares of the Magnificent Seven, and you guys know I've talked about the Magnificent Seven for months, just 7 of the top 15 largest most valuable companies in the world. If you want 10 fractional shares of the Magnificent Seven, these 7 companies are the top 7 companies in the S&P 500. If you want 10 fractional shares of those companies to start building your wealth, I mean, what a better way to start building wealth when someone's going to give you 10 fractional shares of the most valuable companies in the world. For you opening up your Moomoo account and putting in $100 in your new Moomoo account. That link is down in the description box. First link in the description box is that Moomoo link. What a better way to start building wealth than to get 10 free fractional shares of the most valuable companies in America and in the world in your portfolio for free. How do you turn that offer down? I have no idea. If you're trying to build wealth, you want to have Apple, you want to have Microsoft, you want to have Meta, you want to have Amazon, you want to have Alphabet, Nvidia, and Tesla in your portfolio, and you're going to get them for free. Just by clicking on that link down in the description box of this video, that Moomoo link, signing up for Moomoo, putting $100 in your account to start with, they're going to give you those 10 fractional shares of the Magnificent Seven. Guys, if we're trying to build wealth, I don't know how you turn that offer down. I don't care if you got 10 brokerage accounts out there. I don't know how you turn down somebody giving you 10 fractional shares of the most valuable companies in the world. How you turn that down? No, you don't turn it down. You take it. It's the most valuable companies in the world. So get down to that description box, click on that Moomoo link, and don't delay. Act today. Start building your wealth with the top 7 companies in the world in your portfolio. And then what do you do next? You keep putting money in your brokerage account and you keep buying fractional shares. That's what you do. Pretty simple. You ain't got to be a rocket scientist. You don't have to be a PhD in mathematics from Harvard University. No, it's pretty simple. I keep putting 100, 200, 300, 500,000 dollars, $2,000, whatever I can afford. I keep putting that in my brokerage account every single month, and I keep buying the Magnificent Seven every single month for 10 years. Or I sprinkle in some ETFs, S&P 500 ETF, right? I sprinkle in a healthcare ETF, or I sprinkle in a tech ETF, along with buying fractional shares of the Magnificent Seven. I just do that for 10 years. History tells me my net worth is going to be bigger in 10 years than it is today. But it starts with opening a brokerage account, getting yourself 10 free fractional shares of the Magnificent Seven. So get down there and do that. The other thing I want you guys to consider is checking out my new website, the Richard Fain Millionaire Mentor website. It's up and running and doing fantastic. Got about 30,000 people that already went to the website. Already. It's been up 1 week. And some of y'all might say, that's not a lot of people. Guys, that's a lot of people when it's organic. I'm not out here paying for advertising for my website. I don't pay YouTube no advertising. I don't advertise on Facebook. I don't advertise on TikTok or Instagram or Twitter, none of that. It's all word of mouth, me telling you guys through these videos. So 30,000 folks, that's a lot. And guess what? A lot of you guys have taken advantage of those wonderful digital products that we have on the website. Those digital products do nothing but aid you in getting to your pot of gold at the end of the rainbow. If you want to learn about index fund investing, we got something on the website that can help you through that process. If you want to learn about drip investing, we got something on the website that can help you with that. If you want to grow your business, we got something on the website to help you with that. If you want to start an online business, guess what? We got something on the website to help you with that. If you want to invest in real estate with little or no money down, we got something on the website. Let's say you got credit issues. Let's say your credit score is low and you're trying to rebuild your credit. Guess what? We got something on the website that can help you rebuild your credit. Guys, what if you're just trying to work on mindset? I'm trying to figure out how I get this millionaire mindset. How do I do that, Richard? We got something on the website that'll walk you through mindset, how to change your mindset from a raggedy mindset to a millionaire mindset. And I'm not trying to throw shade at anybody. I'm just telling you, some of us have a really bad behavior with money. This millionaire mindset ebook we have will walk you through how to go from a bad behavior with money to a good behavior with money. So listen, man, whatever you're trying to get accomplished in your financial life, we got something on the website that can help you do that. But you got to make an investment in yourself, right? You got to make an investment in yourself. Also, I want you to consider joining the membership club, the Richard Fain Millionaire Mentor Membership Club. A lot of you have already joined, guys. We got limited space. So when it fills up, it fills up. Right now, we're well on our way. The website's been up 1 week, guys. It launched April 15th, 1 week ago. And already the membership club is exploding. Why? Because you guys understand, the current membership club members, the paid members, understand the value of spending 90 minutes with me every single week off of the YouTube platform. Off of the YouTube platform. They're going to have me for 90 minutes, the Richard Fain Millionaire Mentor Membership, paid membership club members. Now, again, if you want to join the membership and you're not a paid member, then you certainly won't get the perks, right? The perks are be a paid member and you get me for 90 minutes every week. That's it. That's the trade-off. You become a member, a paid member, and you get me for 90 minutes every single week in a live stream. Won't be on YouTube. It's only going to be for paid membership club participants. And what are we going to talk about? We're going to talk about everything finance, but deep dive. Not none of this surface stuff. It's a deep dive. So if we talk about side hustles, deep dive. If we talk about how to start a business, deep dive. how to borrow money for your business, deep dive. If we talk about the stock market, what should we be looking out for? Deep dive. Everything we do is going to be a deep dive. And guess what? It's going to be driven by the membership. The membership will tell me what they want to discuss in that coming week's live stream. And that's what we'll discuss. See, we don't do that on YouTube. I don't ask anybody what they want me to discuss. I just discuss whatever I want to because it's a different audience, right? This audience right here has made a decision in the membership club. They've made a decision. I'm going to invest in myself so I can get 90 minutes of Richard Fain just with a small group of folks. So guess what? Since they made that investment in themselves, hey, I got to go ahead and get feedback from them so that we can discuss what they want to talk about. See, on the YouTube channel, I discuss what I want to talk about. I don't ask nobody. Either you like it or you don't. In the membership club, they drive the discussion. That's the big difference, guys. See, that's the huge difference in what I do on YouTube. I drive the whole discussion here. I don't ask for no input from anybody. In the membership club, it's all about the members. Whatever they want to discuss, that's what we discuss 52 weeks a year for 90 minutes per live stream. So, needless to say, if you're interested in that, get over to the website. That's the second link down in the description box. Get to the website, go check out the digital products, and get in that membership club, man. I'm telling you, get in the paid membership club. I promise you, you're not going to regret it. We start in May, and this thing going to go to the moon. You're not going to regret it because y'all know how I am on YouTube. I'm going to be even more laser focused in that membership club meeting. I'm going to be even more laser focused than I am on YouTube. So thank you guys. I appreciate that. Let's get down to this real business at hand. We got to talk about this. We got a couple major banks. And I say major, guys, I'm talking about big boys. Too big to fail. I'm talking about, I call them the four horsemen. You got JP Morgan Chase, you got Bank of America, you got Wells, and you got Citi. Those are the four horsemen, four largest banks in America. JP Morgan Chase is the fifth largest bank in the world. They're the number one in America, though. We're going to talk about two major banks that are, in my opinion, are in trouble. And JP Morgan is warning the Federal Reserve. Let's talk about it. Here's the headline. And then we're going to dive into some stuff about the stock market and a couple more things. But here's the headline. 400 billion. Basically 38 billion in deposits. Flight hits Wells Fargo and Citibank in 1 year. They lose $38 billion in deposits. Guys, I'm not talking about your corner credit union. You're talking about Wells Fargo and Citibank. These are two of the four horsemen. These are two of the too big to fail banks. And then guess what? As JP Morgan Chase CEO issues warning to the Federal Reserve. How in the world do you lose $38 billion in deposits? How? What is happening? Well, let's talk about it. Let's read and talk about exactly what's happening to these two mega banks. Because guys, let me tell you, that's not normal. They didn't lose that over 5 years. They lost that in 1 year. $38 billion in deposits. You do understand how valued the deposits are to a bank, right? They use those deposits to make money. They use your money to make money. And when you lose $38 billion in deposits, that's a lot. That's a lot of money you've lost that you could be turning into more money for the bank through net interest income. It's lost, it's gone. But let's figure out why. New numbers show two of the largest banks in the U.S. are witnessing billions of dollars in deposit flight. Quarterly earnings data shows Citibank deposits dropped from 1.33 trillion in Q1 of 23 to 1.3072 trillion in Q1 of this year, a reduction of 23.3 billion in the span of 12 months. Citibank alone lost $23 billion in deposits. That's Citibank, one of the four horsemen. This is not, oh, Silicon Valley, one of these little regional banks. No, this ain't your little local credit union. This is a big boy bank. When I say mega bank, they're a mega bank. JP Morgan Chase says deposits tumbled. Now, this is the largest bank in the country, fifth in the world. JP Morgan Chase says deposits tumbled 7% in its consumer and community bank division in Q1, excluding members from the firm's majority acquisition of troubled First Republic Bank. You guys remember JP bought that failed bank. I think they were out of, I want to say San Francisco, but JP basically JP cut a sweetheart deal, right, with the FDIC, right? The JP cut a sweetheart deal with the FDIC. And how these sweetheart deals work is like this. When you have a failed bank, the FDIC steps in, right? The FDIC steps in and they take this bank, they take the deposits, they take the loans, and what do? They match them up with other banks. So JP steps in and says, hey, we'll take it, but here's the sweetheart deal. They typically won't take any of the toxic loans. So anything that's bad, normally the FDIC keeps. JP normally takes the deposits and all the good stuff. And if they do take any bad stuff, they have a backstop from the FDIC. They have a backstop. What that means is, let's say JP takes on some of those toxic loans, but they continue to go bad, or they take on a portfolio that looks like it might go bad and it goes bad. They cover. The FDIC steps in and makes them whole. So they sign and go in cahoots with FDIC with a sweetheart deal, and they buy First Republic Bank. But they're saying it's not because of that. Across the entire firm, JP Morgan says deposits were flat, excluding First Republic. So it ain't got nothing to really do with First Republic. It's just they lost 7% of their deposits in their consumer and community bank. And that's basically what they call their general bank. That's like where you and I go. These little brick and mortar branches around the country that we go in to cash checks and to make deposits and apply for loans. They call that the general bank. And in their general bank, which typically for big boy banks, the general bank makes a lot of money for them. It really does. It makes a lot of money for them, right? It's a lot of really low expense money. They charge you fees on everything. You know, they make a lot of money in the general bank. But 7% tumble in deposits. This is JP Morgan Chase, guys. Moving forward, JP Chief Financial Officer Jeremy Burnham says America's biggest bank expects deposit balances to remain flat at best as consumers look for more yield on their cash. So they're saying you guys are out here looking for more yield, which you should be. Ain't nothing wrong with that, right? Y'all are starting to learn that these guys ain't doing nothing in business just to take your deposits and give you a little bit of interest rate. So what you've been doing is you've been going in there and saying, no, give me my money. Let me go put it with this online bank. Let me go put it with this community bank. Let me go put it with this credit union where I can get a better money market account, because I know JP Morgan Chase ain't gonna give me no 5% money market. I know Wells Fargo ain't gonna give me no 5% money market. I know Citibank ain't gonna give me no 5% money market. I know Bank of America ain't gonna give me no 5% money market. So let me go find me That's what's starting to happen. Y'all are starting to take your money out of there and move it. Nothing wrong with that. Just be careful. Be careful of these little baby banks. Be careful, because they're not too big to fail. The Federal Reserve will let them fail. The FDIC will let them fail. whoever the government will let them fail, the little banks. They're not going to let these big boys fail, but they will let them little ones fail. So be careful. Oh, I got 5% money market at some bank online. You better know who they are and what they're doing with your deposits. Let's keep reading. We expect deposit balances to be sort of flat to moderately down. So that's a little bit of a headwind at the margin. And basically what they tell you here is, guys, it's fancy words they're using, but here's what they're saying. See, deposits are really, 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 really cheap for them because they're not going to pay you 5%. They're not going to pay you. They're not. So if you decide to keep your deposits with JP Morgan Chase, Bank of America, Wells Fargo, Citibank, they're not going to give you really no interest on your money market, really no interest on your savings account, right? So it's an easy way for them to take money and go lend it out to somebody at 5, 6, 7, 8%, or they take your money and invest it overnight and then sweep it back into their bank the next morning. They make money that way. They make money in a lot of ways with your deposits, right? They do. They do. So what they're saying is, since they're starting to lose some of these easy money deposits where they don't pay you no interest rate on them, that's starting to cut into their margin because it's very profitable for them. Deposits are very profitable for them because they pay you nothing, and then they turn around and take your deposits and they leverage them 100 times doing something else to make a bunch of money off of them. Right now, they're saying since they're losing deposits, that's cutting into their profit margin. That's all they're basically saying. In a world where we've got something like 900 billion of deposits paying effectively zero, $900 billion in deposits paying zero. That's how they do you. In a world where we've got something like 900 billion of deposits paying effectively zero, relatively small changes in the product level reprice can change the NII run rate by a lot. And what does NII mean? Net interest, right? Net interest income. That's what it means. Net interest income. They pay you nothing on your deposits. They take your deposits. They go do something with it and make 5, 6, 7, 8%. They get all the gravy. You get very little gravy. See, they get all the gravy. You get very little gravy, but it's your money. People are starting to get smart to that, though, see? Y'all starting to get smart and say, no, JP, you want to pay me little gravy. I'm finna go get this big gravy. And then you take your little deposits and you go put it online, or you go give it to a community bank, or you go give it to a credit union, and they give you a better deposit rate, right? That's what's hurting these guys. It's eating into their net interest income. It is. So there you go. Let's keep moving. Meanwhile, JP Morgan Chase CEO Jamie Dimon warns U.S. banks. See, here we go now. Listen to this. Listen carefully. Listen carefully. Meanwhile, JP Morgan Chase CEO Jamie Dimon warns U.S. banks will likely witness another crisis if the Federal Reserve decides to raise interest rates. Listen, guys, this guy is the CEO of the largest bank in the country, 5th largest bank in the world, billionaire. This guy's a billionaire, been around a million years, well connected, right? He ain't bluffing. He's telling you the truth. He ain't bluffing, right? Let's read it again. Meanwhile, JP Morgan Chase CEO Jamie Dimon warns U.S. banks will likely witness another crisis if the Federal Reserve decides to raise interest rates. In his latest annual shareholder letter, Jamie Dimon says that banks, as well as leveraged U.S. firms, will be in dire straits if persistent inflationary pressures force the Fed to tighten monetary policy further. And all tighten monetary policy means is you jack up interest rates. That's all that means. It means the Fed increases interest rates. What could cause the Fed to increase interest rates, guys? Somebody in the chat tell me what What can cause the Fed to increase interest rates? If inflation doesn't come down, if inflation doesn't come down, if inflation continues to be sticky and continues to kind of start slowly moving itself back up, what if we get, let me ask you this, what if we get the April CPI inflation report in May, we'll get it in May, and inflation goes to 4% headline or core? What do y'all think the Fed gonna do? That's what he's talking about. This is what he's talking about. If the Fed increases rates, it's gonna put pressure. It's gonna put pressure on banks and other leveraged US firms. It's gonna put pressure on them. It's gonna put pressure on them. So he's saying, be careful, Fed. Be careful, or you will jeopardize the financial stability of this country. Because let's make no mistake, those 4 banks I just mentioned, oh yeah, something happens to them, oh yeah, something happens to our entire financial system. You're talking about trillions and trillions and trillions and trillions and trillions of dollars between these 4 banks. Why do y'all think none of them, they didn't let any of them fail in 2008? The only bank that actually could have failed was Wachovia. But guess what they did? FDIC got with Wells Fargo, cut a sweetheart deal. Hey, Wells Fargo, you go in and buy the entire bank. Entire Wells Fargo, take everything. Nobody loses their pensions. Nobody loses their 401k. No, because had they not done that, guess what would have happened to all of those employees at Wachovia? Guess what would have happened to all of those millions of investors who invested in Wachovia stock? They'd have went to zero. That's the reason they're not going to let any of these banks fail. Can you imagine the United States government allowing JP Morgan Chase to go to zero? Can you imagine the ripple effect that would have on this entire country and the world? They're not going to let it happen, guys. That'll never happen, ever. See, they're too big to fail. But what he's telling them is, listen, in a subtle way, he's telling the Fed, y'all need to start reducing these interest rates. That's what he's telling them in a subtle way, right? And guess what? This guy carries a big stick, man. I'm telling you, he carries a big stick. That's my opinion. You guys come up with your own opinion. But my opinion is you cannot afford to go through 2024 without reducing interest rates. You certainly can't increase, but you certainly, at this point, you can't afford not to decrease. At some point, you have to. You have to, right? And I believe the Fed will. When we purchased First Republic in May 2023, this is JP Morgan Chase CEO walking you through the purchase of First Republic. Check this out. I thought this was pretty interesting. When we purchased First Republic in May of 2023, following the failure of 2 other regional banks, Silicon Valley Bank and Signature Bank, completely failed. First Republic was the 3rd one. When we purchased First Republic in May 2023, following the failure of 2 other regional banks, Silicon Valley Bank and Signature Bank, we thought that the current banking crisis was over. We thought it was over. Only these 3 banks were offsides in having the toxic combination of extreme interest rate exposure, large unrealized losses in the hold to maturity portfolio, right? And highly concentrated deposits. Interest rate exposure. See, what happens is you get these banks, at least one of the things they do. You come in there and put your deposits in there, right? Let's take one of these little banks. And all of them do it. I ain't gonna even say a little bank, just bank in general. This is one of the ways they make money. You come in there and put your money in there. Let's say it's one of the big boys and they take $2 billion. They take $2 billion worth of deposits. They take those $2 billion and what they do with it? Well, we want to earn some interest. We're not going to pay them any interest, but we need to earn something on their $2 million while it sits in here in our bank. So what they do is they take the $2 billion, they go buy a 5-year treasury bond. Let's say they bought that 5-year treasury bond. Let's say they bought it in 2020. Let's say they bought it in 2020. It's a 5-year treasury bond. Let's say that treasury bond for 5 years, they entered into the 2-year treasury bond at a 2% interest rate. Let's say they get a 2% interest rate for 5 years on that $2 billion that they put in the treasury bond, this 5-year treasury bond, right? That's what they did. Let's fast forward. Inflation starts going up. Like, inflation starts going through the roof. So the Fed start raising interest rates to fight inflation. What happens is, a couple years down the road, that same 5-year treasury bond is now trading at 4%, a new one. So I can come in and get a new one at 4% for a 5-year, but you paid, you locked in at a 2%. Here's what happens. Your loan portfolio that you got, right? You got this loan portfolio over here that's starting to go sideways. People are stopping paying you. Loans are starting to mature and people can't afford the new interest rate because it's higher. So people start walking away from these loans. They start, hey, go to keys. I can't, keep it. Now all of a sudden you got $2 billion over here locked up, right? Because you got a 5-year deal. You're only about 3 years into the deal. You got 2 years left on that bond. So if you cut it early, you're gonna lose money. You're gonna lose some of that $2 billion if you cut it early. You're gonna lose it, right? But you got this loan portfolio over here going sideways. Guess what happens? Now your customers start coming in and saying, hey, I want my money. You got a loan portfolio is going sideways. You're not getting any interest income off it because it's going sideways. You got the $2 billion over here locked into a 5-year bond. You're 3 years into it. You got 2 left. You only got a 2% interest rate, so you can't sell it to nobody. Why? Nobody don't want to buy your 2% interest rate bond when they can go get one for 4%. So now all of a sudden you're stuck. You can't get the money out of there without taking a haircut. Let's say you take the money out early, but you got to discount it to sell it. You can't get the $2 billion back. Maybe you can only get $1.5 billion back. So $500 million is gone. Poof. That's what happens. They take your little deposits, they go out and make money on them, they lend over here, they go put them in investments over here, but then all of a sudden a perfect storm comes like it is right now. That's what happened to Silicon Valley Bank. That's what happened to Signature Bank. And that was going to happen to First Republic Bank. Could you imagine if that happened to a JP Morgan Chase or a Bank of America or a Wells or a Citi? That's what he's talking about. That's what he's talking about. When he's talking about this interest rate exposure, this large unrealized losses in the hold to maturity, he's talking about loans. Or he's talking about these treasury bonds, hold to maturity. The maturity is 5 years. If I want to get out of this thing in 3 years, you're going to pay a penalty. Yeah, you hold it to maturity, you can get your $2 billion back. But if you don't hold it to maturity and there's not someone out there to buy it for what you put into it, you're stuck like Chuck. And that's basically what he's saying here. Most of the other regional banks did not have these problems. However, we stipulated that the crisis was over, provided that interest rates didn't go up dramatically and we didn't experience a serious recession. If long end rates go up over 6%, and this increase is accompanied by a recession, there will be plenty of stress. Where are we at today with the Fed funds rate? 5.5. Just saying. Fed funds rate is 5.5, guys. This guy is saying if we go over 6, and you throw on top of that a recession, there's going to be some problems. There are already problems. It ain't going to be some problems. There are problems right now. You go into the commercial real estate sector, there are some problems. You got $1 trillion in commercial real estate coming due in 24 and 25, resetting at higher interest rates. That's a problem. That is a problem. So we're already at the problem level. He's saying if the Fed if they move to 6%, 50 more basis points, could be a bigger problem. There will be plenty of stress, not just in the banking system, but with leveraged companies and others. Remember, a simple 2 percentage point increase in rates essentially reduces the value of most financial assets by 20%. Don't I tell you guys that all the time? Don't I tell you guys this all the time? When rates go up, assets go down. I tell you that all the time. Some of y'all believe me, some of y'all think I'm crazy. I keep telling y'all guys, when rates go up, assets go down. You just heard it from the CEO of JP Morgan Chase. Maybe you'll listen to him. Remember, a simple 2 percentage point increase in rates essentially reduced the value of most financial assets by 20%. And certain real estate assets, specifically office real estate, may be worth even less due to the effects of recession and higher vacancies. I go back to tell y'all again, 95% of the businesses in this country are small businesses. So when you're talking about commercial real estate space, who do you think is occupying most of that commercial real estate space? Small businesses. If small businesses can't borrow money to grow, they don't grow. If they don't grow, why do I need a commercial building? I don't. So what happens to all that commercial building space? It's vacant. When it's vacant, guess what happens? No income. When there's no income, guess what happens? I don't pay my loan back. That's what happens. That's what happens. I don't pay my loan back. It's a domino effect is basically what the guy is saying. It's a domino effect. It's a domino effect. Also, remember that credit spreads tend to widen sometimes dramatically in a recession. So there you go, man. There is your, and why did I even tell you this about the banks? Why did I even mention it? Because you need to know what's going on, man, when it comes to your money and your deposits. And you need to know what's going on behind closed doors with these big boy banks and the Fed and the FDIC. A lot of stuff that go on y'all don't know about. You ain't gonna never know about it. They cut all kind of sweetheart deals. And guess who pays for it? You and me. Who do you think pays for all of this stuff? When JP steps in and buys a First Republic and says, no, we don't want them toxic loans. We'll take the deposits and all the good loans. Y'all take them those toxic loans. We don't want them. Who do you think pays for that? They got to get rid of them somehow. Who do you think pays for it? Taxpayers. We pay for it. So you need to know what's going on with your major banks and your government, because they're in cahoots together. They're partners. They're partners. Your government and your major banks are partners. They're partners. And guess who they use to fund all this stuff? You and me. How does the government use us? We pay taxes. How do the big banks use us? We put our money in their bank in the form of deposits. We pay taxes to the government. They take our tax money and they do whatever they want to do with it, right? But it's our tax money. The big banks, the only way they're in business, the only way they make money, the only way they're in business, because of our deposits. Citi, $3 trillion in deposits. That's Citibank. So you know JP bigger than that. You know Wells bigger than that. You know Bank of America bigger than that. You're talking about JP, one of the largest banks in the world. Can you imagine if something happened to them? It would be catastrophic. So all I'm telling you is understand the money that you make, what happens to it when you put it in the bank. What happens to it is they take it and they send it 50 million different places. If it's a big bank like JP, they send it probably 85 different ways that they can make money off of it. If it's JP or Bank of America, or they make money a ton of ways off your deposits. That's why it's so critical to them, and it's so alarming to them that they're losing the $38 billion in deposits in 1 year. That's a lot, guys, of runoff. And that's a lot of money that they've lost because of that net interest income that they could have made on that 38 bill. Think about 38 bill when you go invest it overnight in a sweep or you lend it out. That's a lot of money that they've lost, right? So you need to understand exactly how banks make money off your money. That's why I tell you guys, listen, if you're in the building stage of wealth, emergency fund is really all you need in there, in my opinion. And then the rest of it, you should be in assets. Should be in assets. Why assets? Because right now it's a perfect time to be in assets. And we're going to talk about the stock market and some assets that you could be considering, right? I'm not your financial advisor, but I'm just a guy who's done this for a long time, guys, and made a lot of money doing it. And ain't no secret, I'm a stock market guy. Not in the sense that you think, though. Not a licensed investment advisor, CFP, where I take money from people and tell them, no, I'm not that kind of guy. Not that kind of stock market guy. I'm one of the stock market guys that know how to take his money and put it in there, just discipline himself, be consistent, be patient, and make a lot of money. I'm one of those guys, right? I'm not one of the guys that you got more money. You know what I'm saying? A lot of these investment advisors, don't get me wrong, and I ain't knocking them. They serve a valuable purpose. But think about it. A lot of these people who you giving your money, you got more money than them. Think about it. I go into a bank with $1 million. Ain't nobody else in that bank got $1 million that I'm gonna be dealing with. Probably nobody. I'm not dealing with the CEO of the bank. I'm dealing with whoever's sitting at that desk when I walk in there. But I'm gonna give them my $1 million to invest for me, and I got more than them. See, it don't make no sense to me. I'm like, I got more money than you, but you know more than me. Why don't you have more money than me? Most of these people that you walk into these branches that you deal with don't got more money than you. How do I know that? Because I worked in the banking industry for 25 years. Ain't nobody making any big money like that other than the CEO and the executive team. Ain't no branch manager making that kind of money. Ain't no personal banker making that kind of money. Ain't no financial advisor who that you can just walk in there and talk to and they just sit right there in the lobby. They're not making that kind of money, man. So why would I give my money to them to invest when they're not making more money than me? They don't have more wealth than I got. It'd be one thing if I can go in and talk to Jamie Dimon and Jamie Dimon says, yeah, come on in, Richard, I'm gonna invest your money for you. They're a billionaire. Okay, I get it. But I'm not gonna walk into one of these branches and sit down and say, okay, here's a check for $500,000. What is the best strategy? Oh, here's the best strategy, Richard. Problem is, you don't even have $500,000. You don't have $100,000. You don't have $50,000. Why in the world would I go in there and give my money to you when you don't even have no money? But yet and still you're fine. And again, I'm not knocking them. If that's what you want to do, go do it. But I'm just telling you the truth. Most of these people y'all walk into these branches to talk to, guys, don't know no more than you. They make less than you. A branch manager at a bank probably makes less than you make on your job. Not knocking them. I'm just telling you the truth. So why would I go in there with my retirement fund to give to somebody who don't make more than me or don't have a net worth bigger than me? That's all I'm saying. So know what you're doing with your money. But here is some things you can think about when it relates to multiplying your money. So I went in today and I looked at what's happening in the stock market today, because we know last week it was a sell-off, right? We know it ended on Friday, heavy sell-off. Companies like NVIDIA, companies like Tesla, and many others. I mean, ETFs like VGT, VOO, SPLG, FTEC, all of them traded down, all of them sold off, all of them closed lower. 3 major indexes. S&P fell under 5,000 points for the first time in a long time, right? We know that. Why is that, right? Why are these things starting to happen with the stock market? Why is the stock market starting to correct itself? Remember what I told you guys. When interest rates are high, what happens to assets? They go down. Why hasn't assets in the stock market went down? Because of FOMO and optimism. That's starting to wear off. People are starting to get really, really uncomfortable that the Fed won't reduce interest rates and they keep kicking the can down the road. Oh, no, not June. No, not June. Oh, maybe December. Oh, not 3, maybe 1. People are starting to lose that FOMO. And they're starting to say to themselves, maybe I take my money and go somewhere else for right now. Maybe I go all to cash. Some retail investors, some big boy investors are going all to cash. A lot of people think, let's go to cash. Let's wait this thing out. So when people start going to cash, guess what happens to assets? They go down. Why? Demand is down. Anytime demand is down on assets, asset prices come down. When demand is up, asset prices go up. So when big boy investors, retail investors say I'm going to cash, that means they're taking their money out of the stock market, guys. When money is being taken out of the stock market, there's less demand. So comes down. That's what happened last week. What started happening this week? Well, let's see. S&P 500 rises to start the week, tries to snap 6-day decline. This came out this morning. The S&P 500 rose Monday as Wall Street tried to rebound from a pullback last week, with Middle East tensions easing. So that helps, right? That helps. Traders also looked ahead to the release of major tech earnings. This is a big earnings week, guys. These are some of the things I try to get you guys to understand and pay attention to because it's important. Again, you ain't got to be no expert. You just got to know what's going on, right? The broad market index traded 0.4% higher, while the NASDAQ, and that's the S&P, traded 0.4% higher, while the NASDAQ composite advanced 0.6. The Dow climbed 116 points or 0.3. Both the S&P and the NASDAQ riding 6-day losing streaks and fell 3.1% and 5.5% respectively last week. So the S&P fell 3.1, and the NASDAQ 5.5. U.S. crude oil prices fell more than 1% after Iran said it will not escalate the conflict with Israel. So that helped oil prices, right? The moves higher come as ahead a potentially big week of earnings with a focus on the Magnificent Seven companies, the Magnificent Seven tech companies. Why is everything around the Magnificent Seven? Because they're the most valuable companies in the world. Say what you want to say. They're the most valuable companies in the world. That's why the hoopla is around them. So here's the deal. What did I tell you at the beginning of the video for y'all have been around? Get down to that description box and click on that moo link. They're going to give you 10 fractional shares of the Magnificent Seven. What a great way to start your portfolio, man. What a great addition to your portfolio, the Magnificent Seven. You're hearing what they're saying here. The moves higher come as ahead of potentially a big week of earnings with the focus on the Magnificent Seven tech companies. What have I been preaching for the last 6 months? What have I been saying the last 6 months? Now, last week, guess what happened? You got a really nice birthday gift early. What's the birthday gift, Richard? What? I didn't get a birthday gift. You got a birthday gift. If you're paying attention to my channel and you're paying attention to what I'm asking you to consider, I can't tell you what to do. It's your financial freedom. But you got an early birthday present. You got an early Christmas present if you celebrate Christmas. What was that? All your major big boys went on sale last week. Had you listened to me and put the missile in the canister and been ready to fire the missile on Monday morning, you'd be catching upside today. You'd be catching the upside right now in the video. Had you listened to me? Okay. Get down to the description box and sign up for the Moomoo. Use the Moomoo link. Sign up for Moomoo. Open your account with Moomoo. Put $100 in there. They're going to give you 10 fractional shares of the Magnificent Seven. Stop missing the train, man. Stop missing the train. Stop missing the train. There are probably two dynamics at work behind the better tone in global stock markets this morning. Two dynamics. Let's talk about them. The decline in gold and oil prices and the steadiness in the USD or the dollar. Whether that's true or not, I don't know. Above my pay grade. All I do is I just watch my favorite companies and what they just did. The video closed at 762 on Friday. What is it trading at right now? Anybody in the chat? What's NVIDIA trading at right now? Anybody in the chat can give me an update on the video. Anybody in the chat, give me an update on the video, and I'm gonna keep moving. And let me see if I can. Okay, 773. It started out at around it immediately jumped up to like 970. I'm sorry, 790 something. It immediately jumped up. Now it kind of settled itself back down a little bit. But here's the deal. This week is an earnings week for a lot of Magnificent Seven companies. And if they post great numbers, and then guess what's coming in May? NVIDIA's first fiscal year, for their new fiscal year, their first quarter is coming in May. I'm telling you something, guys. If they beat expectations, where that stock price is today, woo, it's a bargain. I'm telling you, it's a bargain. I'm telling you, this is the thing we got to start paying attention to. In May, NVIDIA is coming out with their first fiscal year Q1. And if they beat, okay, here we go. FX rates and strategies, for one, concern over a spreading regional war in the Middle East has faded. That's good news. That's faded. Hopefully it'll stay faded. The movement away from a wider shadow war is probably why U.S. bond yields are higher today. Now, what do they mean by shadow war? Can anybody in the chat tell me what they mean by shadow war? What do they mean by that is, y'all know the United States going to be all up in them folks' business. Y'all already know that. That's what they mean. United States ain't going to be directly fighting a war, but they're going to be all up in their business. They're going to be all up in the business, all up in the mix. That's all he's saying. You know, we're going to be all up in the mix. But since there doesn't appear to be escalating, there's no reason why the United States should be all up in people's business. Therefore, guess what? Bond yields are higher today. Companies including Tesla, hear me out. I'm telling you guys, pay attention. Tesla's trading under 145? I keep telling y'all guys, these folks don't need but 1/4 to go to the moon. Just 1/4 of beating expectations. They're going back to the moon. You can buy them at $145 a share. Are they lower than that? 138? Oh my! I already told y'all, man. I already told y'all where I'm at. I'm gonna keep moving because I done already told y'all where I'm at on Tesla. I'm gonna just keep moving. I'm gonna keep moving because ain't nobody out there listening to me. Let me just keep moving. I'm trying to drop the financial breadcrumbs here. I'm trying to drop some breadcrumbs. I'm trying to drop some financial golden nuggets, but ain't nobody interested. No one's interested in that. No, nobody's interested in that. The only thing we're interested in is TikTok and funny videos on TikTok and Instagram and Facebook and that kind of stuff. We ain't interested in being no owner of any of these companies. We're not interested in being a shareholder. We're not interested in getting to that pot of gold at the end of the rainbow. No. But I'm gonna keep reading. Companies include Tesla, Meta, American Airlines, Microsoft, Alphabet, all set to report in the week ahead. All of them report, I believe, Q1 earnings. You got 4 Magnificent 7 companies reporting this week. I don't know, guys. I don't know. All set to report in the week ahead. Tesla reports after the bell on Tuesday. So when the market closes on Tuesday, Tesla's gonna come out. So I don't want people. But here's the deal. I don't know what the report's gonna look like for Q1. Clearly, there are people who know something that I don't know because it's still falling. So study buying the dip, right? I'm gonna just keep buying the dip. I hope it get down to $100 a share. That's what I hope. I hope I can buy the dip all the way down to $100 a share for Tesla. I hope it gets to $100 a share. Oh my God. If it can get to $100 a share, and they're gonna bounce back, because you remember, guys, in 22, they did the same thing. Remember in 22? Remember what happened in 22? Anybody can remember 22 when Tesla got down to like, what, 104? And then within 6 months, what it was trading at? Damn near 300. I'm just telling you, do whatever you want to do. I know what my marching orders are when it comes to building my wealth. I'm gonna buy the dip. Facebook parent Meta is on deck Wednesday. So Facebook coming Wednesday. While Apple, Intel, and Microsoft all report on Thursday. There is some potentially bigger news in the back part of this week with GDP due out on Thursday. That would be first quarter 2024 GDP, gross domestic product. That's for our economy, the United States economy. Did it grow or positively, or did it lose ground and was negative? We'll know that. That's the GDP, the gross domestic product. We'll know that for the first quarter 2024 on Friday. Due on Thursday, and a key, due on Thursday, I'm sorry. And a key inflation reading on Friday when the Commerce Department reports personal consumption, which is PCE. So PCE will come out on Friday, and then GDP will come out on Thursday, right? The PCE deflator is the Fed's preferred inflation gauge. Why would you watch that? Guys, it's going to tell you what's going on with inflation. And they just told you that's the one the Fed really hangs its hat on. Not really the CPI report, but the PCE report. So it would make sense to pay attention to that. Now, of course, I'm going to cover it on Friday. But for you to understand, these are some of the things you got to start wrapping your mind around. Got to be no expert. Just know what's going on, guys. That's all. And of course, I'm here to help you. The Fed meets again on April 30 and May 1. Might want to put those two dates in in your calendar. The Fed will be meeting on April 30th. When is that? What's that? Next Wednesday, guys? I think that's next Wednesday. If I'm not mistaken, 28th is, no, 29th. 29th is Monday. Well, maybe Tuesday. Maybe it's Tuesday. Yeah, Tuesday. So Fed gonna have its FOMC meeting on next Tuesday and Wednesday. Why is that important? Because the Fed chair gonna come out and tell you what's going on with interest rates. Right? They're gonna tell you if we're gonna keep them where they're at, we're gonna increase them, decrease them. They will tell you that on May 1. What is the market thinking they're gonna do? Keep them where they're at. That's the consensus on the street right now. The consensus on the street is they're gonna keep rates steady, right at 5.5%. That's what the street is saying. That's what the street is saying. Stocks tickled higher on Monday while Wall Street is looking to rebound from a string of losses last week. We covered that. So there we go, guys. There's your daily update in the market. All I can tell you is there are a lot of things on discount right now. Big boy blue chip on, I'm talking about ETFs. I'm talking about individual stocks. You got some of the biggest and big heavy hitters that are on sale right now. And honestly, if you're trying to build wealth, no better opportunity than to swoop in and go shopping. And like I told you, bring out the wheelbarrow, get your shovel, and start putting some of these discounted assets in the wheelbarrow, taking them back to the house. And then guess what you do with them? You just hold them. Put them in a safe place and just hold them and just wait. Listen, man, you ain't got to be real smart to do that. I'm not that smart. I'm not that smart. Not when it comes to, analyzing, stock market charts and all that. I don't know how to do none of that. I barely know how to turn on my iPhone. I ain't gonna lie to you. Barely know how to turn on my iPhone. But one thing I do know how to do, I do know how to make money. That I know how to do. Really, really good. All the analysis behind it, I don't know anything about that. Well, Richard, how do you determine a buy price and a sell price? What's your analysis you go through? None. I just say, okay, Tesla 2 years ago was trading at 104, and within 6 months it went up to 300. Okay, what am I comfortable with? Okay, Richard, I'm comfortable with 150. Because at 150, if I can buy at 150 or cheaper, can Tesla go to 100? Can it go from 150 to 250 like that with one good earnings report? Can it swing 100 points, $100 a share with one earnings report? Yes, it can. So that's my target price to buy, 150. I got to make at least $100 per share. See, I'm not buying at 150 saying, oh no, I'm gonna sell at 400. Nope, that's not what I'm doing. I'm buying at 150 because I know Tesla will get to 250 overnight. Just like that. One good earnings report. That's it. Game over. I just made $100 a share. So no scientific. No, it's just, okay, 150, 250. I need to make $100 a share. I just made that number up. There's no chart I looked at. There's no guru I went to and say, Guru, I know you're a guru, and on YouTube you say you're a guru. Can you tell me? No, I didn't do that. I just said, hey man, what makes sense for me and my financial plan? I need $100 a share, or I ain't gonna buy it. What's your financial game plan for the video? Well, same thing. I need at least $100 a share. All I know is that thing within the matter of a day can have $150 per share swing. One day. That's all it takes. So for me, if it's traded at 950, a share on March 25th. That's what it closed at. I'm saying to myself, it closed at $9.50 a month ago. Fast forward a month, it closed at $7.62. Has anything changed with NVIDIA in that 1 month? What's changed? Has the CEO quit? What changed? Again, guys, I'm no rocket scientist, but I don't believe anything really changed. So I think it's a temporary decline in price per share just based on what the overall market is doing. I think that's just temporary. So why wouldn't I buy it? So that's how I do it. All that other stuff, I don't get in all that. I just say, golly, man, it did 950. Nothing's materially changed. The market, it was just a sell-off altogether in the whole market. It ain't like everybody else is booming and the video is sliding. That's a problem, right? That would be a problem if everybody's booming, but they are sliding. That's a problem. That's a problem. That becomes a problem. But there's no problem when the overall market takes a correction. That doesn't mean, so yeah, NVIDIA took a correction, but it's a temporary correction in my opinion. It's temporary. So the game plan for me is pretty simple. Tesla, NVIDIA, that's the only two big boys individuals. And then, like I told y'all, I got my eye on VGT and VOO. I already told y'all the deal. If VOO gets in the 350 range at some point, they may not. But this is how I look at it. Right now today, they're at 450. They get to 350, there's a hundo per share. That's how I do it, guys. Where is VGT at? VGT is what was 479. I don't know what it is this morning. But when I looked at it yesterday, I think it closed on Friday at like 479. So what? They get down to 379. That's a hundo. I buy. That way I just wait till it go back up to 479 again at some point. Boom. What is it at now? 480? Yeah. So VGT is at 480. That's basically where it was. But what has it traded at though? Well over 500. Well over 500. So for me, although slightly discounted, it's not discounted enough. I need it discounted by $100 a share. That's what I need. Discounted by $100 a share on all four of those big boys: VGT, VOO, Tesla, and NVIDIA. Two of them are already there. So they're buys. The other two, I just wait. I wait until it happens. If it happens, great. If it don't, I keep my money in reserve and wait till the next go around. So that's how I do it, and that's how I calculate what I'm going to do, guys. So that's where I'm at, pretty much on that. But here's something that surprised me, though. I want to read y'all this real quick, and we're going to start wrapping this thing up. Here's something that surprised me, though. It says 2 Magnificent 7 stocks will be the largest companies in the world by 2030. Y'all ain't gonna believe who they are though. Y'all, I know what a lot, because that's what I thought. I thought right off the bat, NVIDIA. I'm like, NVIDIA. Not according to this person right here who wrote this article for Molly Fu. I thought that was interesting, the case that they made for it, right? I thought it was interesting. Again, get down to that description box, click on that Moo link, and get your 10 fractional shares of the Magnificent 7. These two companies who they believe will be the largest in the world by 2030. Get your 2 fractional shares of it for free, guys. Get down to the description box, click on that Moo link, put $100 in your Moo account, get your 10 free fractional shares of the Magnificent 7. Let's go. Here's the headline. 2 Magnificent 7 stocks will be the largest companies in the world by 2030. Making long-term predictions is difficult. Who would have guessed 10 years ago that NVIDIA would be one of the largest companies by market cap in the world? Very few would have thought that 10 years ago. 10 years ago, guys. Absolutely right about that. Nobody would have thought that. But those that had that foresight, they're millionaires now. You put $20,000 in NVIDIA 20 years ago, I believe it's 20 years ago, it's worth $3.4 million now. So if you had the foresight, I certainly didn't, but if you did, you made yourself $3-4 million bucks. Even, 2008, 2018, what was that, 6 years ago? Even if you would have put $20,000 in NVIDIA in 2018, you'd have had over $400,000 today. So, just saying, despite this uncertain future, I still believe it is useful for investors to look out 5 to 10 years. See, I'm not the only guy out here saying that, guys. Look out. He's saying look out 5 or 10 years. Have some forward thinking, right? That's what he's saying. Have some forward thinking. Despite the uncertain future, I still believe it is useful for investors to look out 5 to 10 years and think about what companies would be much larger than they are today. Don't I tell you guys that all the time? Don't I always tell y'all, I'm investing for 10 years out because I think the companies that I'm buying today will be worth more in 10 years. That's basically what he's saying. Think about companies you believe will be worth more tomorrow than they are today. And have enough staying power to hang in there. That's basically what he said. Otherwise, you are just making shots in the dark. That's what most people do, by the way. I thought that was pretty good. That was pretty good. Because that's what most people do. They have no plan. No plan. No long-term plan. It's everything short-term. Oh, I put it in yesterday. Can I make $1 million tomorrow? It's all short-term, right? Otherwise, you are just making shots in the dark and should probably buy index funds instead. Well, that's true. That's what I buy. 80% of mine is index funds and ETFs. While not a certainty, I think, who do you think the two companies are, guys? That this guy believes will be the two largest companies in the world by 2030. Who do you think those companies are? Before I go ahead and let the cat out the bag, let me see if anybody knows. Before I let the cat out the bag, who can tell me the two companies? Anybody? Going once. Going twice. Gone. Let's go. While not a certainty, I think Magnificent Seven giants, Amazon and Alphabet, will be the two largest companies in the world by 2030. Here's why. See, nobody ain't said Amazon or Alphabet. None of y'all. None of y'all. Everybody said Microsoft, Tesla, Apple. Nope. Amazon and Alphabet. And here's why. Number one would be Amazon. Put everything in the cloud. Amazon's culture of innovation has allowed it to win in multiple large product categories. Most of us know it as a dominant e-commerce platform in North America, which brings in hundreds of billions in annual sales. But it is not the most profitable segment for Amazon today. That distinction goes to Amazon Web Services. How many of y'all knew that? I did. I didn't know that at all. I did not know that. I ain't going to sit here and lie. I ain't know that. I just learned something new. Yeah, might need to put Amazon on the short list. I might need to put Amazon on the watch list. My goodness. So he's saying, did they bring in hundreds of billions of dollars in annual sales in North America? But that's not their most profitable segment, guys. For Amazon today, the distinction goes to Amazon Web Services. AWS is the largest cloud infrastructure provider worldwide. Guys, I didn't know that. Wow, I learned something new. Bringing in $91 billion in revenue and just under 25 billion in operating income last year. Its major competitors are Microsoft, Azure, Google Cloud, and other smaller providers. But AWS has remained the largest cloud service since its inception around 2 decades ago, with around 31% of the market share. Even though AWS is already large, there is still plenty of room for the cloud to gain market share, various legacy computing solutions. Analysts expect the industry to grow at a 19% rate through 2030. If AWS can maintain its market share and profit margin profile, that will lead to the division to grow its earnings at 19% a year and hit over 90 billion in 2030. Adding in the monster e-commerce division, international expansion in places such as India, moonshots like the Project Kepler internet service, and I think Amazon has a chance of being one of the 2 largest companies in the world by 2030. Man, I didn't know that. I like that. I like that. I like that. Amazon just got put on the watch list. I may go ahead and buy me some Amazon and just put it on the shelf for 20 years. Watch trading at under $200 a share. I may buy me some just to be forward thinking and say, okay, here's 50 grand, buy me a bunch of it, put it in the vault for 20 years and forget about it. I may do that. Pass that on to my kids. That's a good one. That's a good one. So that's the case for Amazon. Let's look at the case for Alphabet. Multiple levers for growth. And who will be the other be? And who will the other be? Well, all we need to do is look at one of Amazon's cloud computing competitors. Alphabet is the parent company of Google Search, YouTube, Google Cloud, and other projects like self-driving company Waymo. Google Cloud should see the same growth benefits as AWS, growing from a 36 billion annualized revenue rate at the end of 23 to close to 100 billion revenue by 2030. So an explosion of about 64 billion in revenue over the next 6 years. That should generate a lot of value for Alphabet, but it's not the only ace up its sleeve. First, we need to highlight Google Search and how much revenue it generates. Google is a beast. That's the $1 trillion research lab, by the way, guys. That is my $1 trillion research lab. The dominant search engine worldwide generates 48 billion in revenue just in the fourth quarter of 2023, and should do 200 billion in annual sales within a few years. As the key advertising engine for many industries like travel, insurance, and financial services, Google search revenue should grow along with global GDP as more of the world starts using smartphones and the internet. Right now, 4.5 billion people got access to the internet, guys. 4.5 billion. We got 8 billion. A lot of upside, right? A lot of upside. Let's not forget YouTube. Alphabet owns the largest video platform worldwide, which generates 9.2 billion in advertising revenue last quarter. That's YouTube, guys. Big old gigantic 600-pound gorilla. Not a 900-pound gorilla, but a 600-pound gorilla. Big, gigantic 9.2 billion in advertising revenue last quarter. YouTube has billions of users around the world and is the most popular streaming video service on TVs in the United States. Yes, that is TVs in the United States, not all devices. YouTube is growing entertainment mainstay for people around the world. I think it will be even more dominant in 2030. Last year, Alphabet generated $85.7 billion in operating earnings. With so many growth levers to pull, it seems likely that the company will continue growing its earnings over the next few years. By 2030, I think this will lead the Magnificent Seven giant to pass the likes of Apple and Microsoft and become one of the two largest companies in the world alongside Amazon. Man, that's crazy. Here's one little fun note. Check it out. One little fun note. Consider when NVIDIA made this list on April 15, 2005, if you invested $1,000 at that time of our recommendation, you'd have $466,000. If you would have invested $1,000 in NVIDIA in 2005. Crazy, ain't it? Crazy stuff, man. Just crazy stuff. Well, guys, I appreciate y'all rocking with me. Like I said, man, this thing is all about putting yourself in a position to build wealth, man. I just gave you so many breadcrumbs, so many golden nuggets. Hopefully some of y'all picked them up. Hopefully some of y'all caught them. Hopefully some of y'all will take this information and turn it into execution, right? Hopefully you'll do that. I hope so. I already told y'all what the game plan is today for me. I'm going shopping. I'm going shopping. I got to. Daddy need to increase that net worth. I got to increase that net worth. I got to pass on some generational wealth, man. I got to do it. So I'm going shopping. I'm going to be buying the video. I'm going to be buying Tesla for sure today. I might even throw in some Alphabet, and I might throw in me some Amazon just because of what I just uncovered here today. Gotta throw them in there. Won't be big boy purchases, but man, if I can throw me 10 at each one of them and just put them in the vault and just forget about them for 20 years, that's the kind of guy I am. That's the kind of investor I am. I'm alone, man. I'm not one of these short-term guys, impatient. Oh, golly, I just put in $5,000 yesterday. Is it time to take it out? No. If you want to, you can. But if you're trying to build wealth, no. Double down. Put another 5 in. Put another 5 in and just be long in the big boy stuff though, right? In the big boy stuff. So hopefully this helped you guys. Like I said, man, get down there in that description box and you got to click on that Moo link. Man, what are you waiting on? They're going to give you 10 fractional shares of all these companies I talked about. Oh, Tesla ain't in the Magnificent Seven. Tesla ain't this, Tesla ain't that. Who cares what you think about Tesla, bro? The man rich. I can't get it, boy. Y'all, these people rich. The guy started from goose egg. And he's one of the richest people in the world. And you right here talking about, oh, Tesla. Listen, man, let me go get this money. Y'all do whatever y'all want to do. I'm going to go get this money. I'm going to go get this $100 a share in Tesla. And again, it's coming. History says it got to come. And I'm going to have $100 a share and I'm going to make a lot of money. So sit on the sideline if you want to. Pick your nose if you want to. Go right ahead. Make excuses if you want to. I'm not. I'm going to get on in. I'm going shopping. And I'm like I said, I got to get this net worth up. So I'm going shopping today. But like I said, if you want them 10 fractional shares of the Magnificent Seven, you got to click on the Moo link. Go ahead and open it up. Put $100 in there. Get your 10 fractional shares of the Magnificent Seven. And I've already told you what the game plan is. Keep doubling down. Keep doubling down for 10 years. Right? Just keep on adding to it. Keep putting money in that Moo account. Keep buying and just do that for 10 years. Just keep buying for 10 years consistently. Just do that. Do that for 10 years, consistent. I don't think you lose. I don't think you lose. Also, make sure you get to the second link down in the description box and click on the website link. Go check out the website. Go grab you some of those digital products that will help you get to your pot of gold at the end of the year. They'll help you get to your pot of gold. In 24, 25, 26, 10 years from now, big old pot of gold. But you got to get the information. You got to then execute the information. That's the whole point of the website. Provide you with information for you to execute. That's what you got to do. So go grab them digital products on the website. And don't forget to get yourself in the paid membership group. That's right. It's a paid membership group. It ain't free. YouTube's free. That's why I'm on YouTube every day. So if you're looking for free, you're in the right place. If you're looking for free on the website, you're in the wrong place. Ain't nothing on the website free. YouTube is free. So if you like free and that's all you're willing to do, I'll see you tomorrow on YouTube. It's free. But if you go to the website, that's not free. So don't even go over there if you're looking for free. If you're looking to get into the membership club and you're looking for free, it's not free. You can sign up free, but you get nothing. It's the paid membership portion that get everything, which is the 90-minute live streams with me every single week in that intimate group setting. Just a few of us, right? That's what they're going to have access to me, 90 minutes, and it's driven by them. YouTube is driven by me. I don't ask anybody what I'm going to go over on YouTube. I decide and I just give it to the world, to that 4.5 billion people around the world. See, a lot of y'all think I'm just talking to you. No, I'm talking to 4.5 billion people, a million countries. I get people from all around the world, guys, that contact me. Australia, Africa, China, Asia, Europe, Canada. Matter of fact, any of y'all Canada folks watching this video, get down to the description box and click on that Moomoo link. It's in Canada now. You can get free stuff. Get down to the description box. If you're from Canada, join Moomoo. They got something for you for Canada, and my link down below works. So my point is, YouTube is for free. It's for everybody around the world, not just people in the United States. It's all around the world. And I'm okay with that. And I take all of those emails from everybody all around the world, not just people in the United States, all around the world. But the membership club, that's different, right? That's different. That's going to be driven by the members of that membership club. They're going to say, hey, Richard, this is what we want you to discuss with us this week. And that's what we discuss. So if you want to be a part of that group, man, it's going to be exciting. We're going to make a lot of money. Right? We're going to get a lot of folks to the pot of gold at the end of the rainbow. I'm going to do everything in my power to help them get there. Ultimately, it's up to them now, but I'm going to do everything in my power. So get over to the website, check out the digital products, get yourself in the paid membership group, guys. Get yourself in the paid membership group. You're not going to regret it. All right? Well, appreciate y'all, man. I'm going to get on out of here. It's Monday. It's shopping day. So y'all know I got to go get me some big boy assets today, some big boy blue chip paper assets today. Got to go to the reserve vault, pull out some money and go shopping. And man, I'm going shopping. And I hope you guys consider that as well. Put something brand new in your portfolio. I just gave you some companies here that you can potentially look at. What about that Amazon? What about that Alphabet? Those two right there, heavyweights. These people think they're going to be the two most valuable companies in the world in the next 6 years. I don't know, but I don't know. You might want to take a look at that, a strong look at those folks, all right? Well, appreciate y'all, man. Hit that thumbs up button before you get out of here. I really would appreciate that. That goes a long ways for helping the channel and getting us out to that 4.5 billion people that we're trying to reach. So if you can hit that thumbs up to help me get out to 4.5 billion people, I would appreciate it. 4.5 billion people I'm trying to help through my solution, right? I'm trying to solve problems for 4.5 billion people. So if you can help me get to them by hitting that thumbs up, I really would appreciate it. And if you rock with me, hit the thumbs up. Hit the thumbs up if you rock with me. Thoughts become things. You can see it in your mind. You can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. Stay healthy. Get wealthy. And I'll catch you guys on the next one.